This is not the first time that we faced a cliff. And unfortunately, we tend to make the same decision in each of those moments where it's, well, I'll be retired before that happens, or we have so much surplus, we'll deal with that problem when it hits. That's not the time you deal with it because it's too late. This is one of those moments where we start to make conscious decisions. This is kind of that time where we get to make a choice about how we navigate it versus we arrive at that moment where it's now too late and we have to figure out how do we survive, which is a very different kind of decision than how do I find opportunity.
That's Bryan Falchuk, and I'm Emma Roloff from Navient, and this is the Future of Insurance.
This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like the Hartford and Farmers use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com.
And the Future of Insurance book series, available exclusively from Amazon or at future-of-insurance.com.
So, since I am taking over your podcast today and you're going to be sitting on the guest side, can you start by telling us a little bit about yourself, the background of the industry, since you don't really do that while you're hosting normally?
Yeah, I never introduced myself. I guess I just assume everyone knows enough about me from the constant LinkedIn spamming that I do. I'm Bryan. Hi. So I'm like a PNC veteran nerd. I don't know what the right word is for it, but I've been around PNC space for just over 20 years. Lots of time on the carrier side, big and small. Started in like humongous multinational insurers. I think I can say where I worked. Like it's on my LinkedIn. I worked at Liberty Mutual for a bunch of years, and just great way to start in with the industry. And like everyone, was by accident, right? Like I got into it. I was trying to do consulting work. They have an internal consulting team. I got an internship there in college. The next thing I know, it's like, oh, actually, there's a ton going on in insurance. There's lots of opportunities to make things better, and that's kind of what I like to do. So I got hooked pretty quickly. I worked at McKinsey for a couple of years, serving kind of similar large multinational, big insurance companies, and then I heard about the specialist space, which I knew nothing about, and it was just totally different. I ended up joining a company called Beasley, who, if people know them, they probably know them for their cyber coverage. This was like we were just starting up in the US. Cyber wasn't even a thing yet. But I was there for those early days of creating cyber, and no one wanted to buy it. They're just like, that's, only for giant companies. Doesn't matter. Of course, like fast forward, it's a little bit different today. So it was pretty neat to be there for kind of the formation of what would become the modern cyber breach policy. Worked there for a number of years, ran operations, and then I ended up at Hiscox running claims for their US business. And that was pretty amazing. So another specialist insurer, small by Liberty Mutual standards, but we were growing really rapidly. So we doubled in the few years that I was there. And then I got bitten by the InsurTech bug and joined a startup called Hi Marley that I was a customer of when I was at Hiscox. And they just raised their Series A and asked me to join to do growth, which is a nice way of saying sales, but sales. And the cool thing there was like, I was going all over the country, seeing all these different carriers, talking to them about the issues that they're facing and thinking about using a digital interaction tools. Marley is a communication solution. And just hearing about like the roadblocks and the desire from customers, but how hard it is to meet that. And I kept having those conversations. And so that's kind of what inspired me. I left Hi Marley just the end of 2019 and started my own advisory business or practice called Insurance Evolution Partners. And it was really to help, those carriers I've been talking to, like help with that issue of how do we meet the changing needs of customers? How do we move forward, even though we have all these constraints? And start to dig in with more startups and kind of help them navigate the insurance space. Like, it can be hard for a tech startup or a techie kind of company, outsiders to the industry, to figure out how do we appeal to insurance companies? How do we get the notoriously slow sales cycles in insurance to compress? Because a lot of those startups won't survive like an 18 to 24 month sales cycle. And certainly their investors don't like it. So what are things we can do to work better with insurance companies, try to help the industry and obviously stay viable as a business idea in the process. So I've been having a lot of fun for the past 2 years doing both of those things. And in the process, all these stories I've been hearing from all these companies started to give me this idea that like I should be sharing these out so more people can grow from this and see, if you're facing some difficulty, how do you overcome that and move forward? And that's where the idea for my book series, The Future of Insurance, and this podcast came from. So I've been putting those books out. Actually, I started the first one like almost as soon as I left High Marley. I remember I was actually at High Marley when I made my first call to someone I knew. It was like, hey, this thing that you guys did, would you be willing to talk about that? I've got this book idea. The guys at High Marley knew that. So it wasn't like, wait, he's sneaking around. But yeah, it's been a lot of fun. And I've been able to be a part of some just very cool conversations with, I think, amazing solutions, whether that's incumbents that are doing things that are growing and learning and changing, or totally new ways of, solving for a lot of the problems in insurance, or the things that customers genuinely want from us, insureds genuinely want. It's neat to be a part of helping the industry change. So that's me in a kind of too big, but nutshell, just a large one, I guess.
Well, and you mentioned the idea of spamming us all on LinkedIn, but I don't think it's spam. I think it is true thought leadership in the insurance industry. And I think that gives us a nice segue into kind of our topic for today, and talking through the report that you just put out for on ESG. And
Yes.
so to get us going in that direction, I think it's important to start the conversation by asking the question, what does that acronym mean? And kind of level setting on the definition. So can you start there, and then we'll kind of dive into the topic a bit more?
Yeah, no, thank you for that. And that was why I wanted to flip the mic around and be on the guest side, because I think this is incredibly important. It's not just an insurance issue. This is a humanity issue. It's one that gets very politicized, but it's really transcended politics from my perspective. I don't think there's much room for opinion on whether this matters or not anymore. And the swell in the world is the same, that this is actually front and center. As I was working on this piece that we'll talk about, the UN was putting out a report on climate change, which is one component of ESG. And they're really saying this is it. This is the moment. We can't wait any longer. It's an alarm bell for the whole world. So ESG is not just climate change. It's a bigger thing, but the E is where climate change fits in. It stands for environmental, social, and governance. Question is, environmental, social, and governance, what? So issues, strategies, frameworks. The noun you put on the back end of it varies, but it's about what is it that you're doing and how does it relate to those three major buckets. So are your activities in alignment with the needs of environmental issues and progress and being on the right side of climate change? And regardless of anybody's politics, you cannot be in this industry and think climate change, A, doesn't happen, and B, doesn't matter. There are no risk modelers who think that this isn't an issue. There are no actuaries who think this isn't an issue. There's no rating agencies who think this isn't an issue. There are no governments by and large. I'm sure there are some people in government here and there, but at a national level, insurance regulatory level, this stuff matters. So the E is pretty clear front and center. The S, the social piece of it, that's about our impact on society. And that includes, the D&I topic that's been so strong in the industry, certainly the past couple of years, but broadening that out to employee engagement as a whole, thinking about the communities that we're in, but then thinking about also not just where we are directly, but the net impact of our behaviors on different societies, different social groups, different people out there. Are we helping them, or are our actions harming them? And the last one is governance. And again, like for insurance, I think we all get that because it's a regulated industry. Governance is nothing new for us, but governance is changing a lot. There's certainly pressure from individuals, from customers to be more transparent, to report more. And a lot of the rating agencies, the regulators, the bodies that we report to are expecting more from us, including boards too. There's certainly a raft of directors and officers, lawsuits and issues over the years. As someone who was responsible for claims in the D&O line, I can attest to that firsthand. And that means that people on boards are becoming more aware of how much they're rubber stamping, questionable behavior. And you're seeing a push for more outsider board seats for people who are not just, the same old, that are willing to challenge things. That's all about governance. So ESG, each one of those components is incredibly important. It's still a bit woolly. Like, it's not totally clear, well, so what's good on ESG and what's bad? And you can say, well, that's stupid. Like, of course it's clear, like carbon emissions are bad, so that's bad for ESG. Totally. But now you have to think about the S part. You're only thinking about climate change, right? Like, what happens if you shut down a particular sector of the economy because it's bad for the environment, which, I'm wearing a green shirt intentionally because I believe in that. What happens to people who work in that sector? How do they then make a living? And, eventually new employment comes in, people move, like eventually things move on, but you will be impacting a group of people for a period of time. That's a social impact. You need to think about that. If you stop fishing in a particular area, like what happens to the captains and crews of those fishing vessels? Now, I'm a vegan, so I'm not contributing to that myself anyway, but I at least recognize one action that looks good on one of these components may be hurtful in another one. And, it makes it really tricky. Like, how do you balance all these things out? And maybe the social side is just our own people. So if we got out of oil and gas, if we're an insurer who's really big in that space, but we have all these risk engineers who we've hired into that practice, what happens to them? So, do we end up creating our own social problems, laying our own staff off and having to navigate through that because of the environmental choice? Or are we choosing them and continuing on something that's harmful for the environment? There's really, really major, difficult, complex thing to navigate ESG. And that's why I felt it was so important that we need to have more of a conversation about it. And we need some ways to think about what even matters in this context. While the rules and the norms still kind of sort themselves out, we need to figure out how we navigate it. So that's kind of what led me to, to want to talk about this issue.
And I mean, first, it's such a large issue to try and unpack, whether it's in this conversation or the white paper article that you put out. But I guess the first question that I have, I understand how this is wide reaching as society. We're talking about climate change on a regular basis. Thank you for wearing green. I should have matched you.
It's okay. I got enough green around me for that.
I've got a wall, so
yeah.
that counts, right?
You have plants.
Yeah, and my plants. And then when we take a look at, social impacts and governance are all around us in all industries. But I guess what I'm getting at is trying to dive into why specifically this is kind of its own standard acronym and things that we're talking about within the insurance industry specifically.
Yeah. Why does this matter to insurance? If it's like a humanity issue, it's just everyone. Like, why do we matter? And why do we need to have a conversation about it in insurance? There's a few reasons. One of them I don't think is specific to insurance. It's just a business thing. So I tried to think about this in three major buckets, and two of those three genuinely are really insurance specific, or on a spectrum, it gets more insurance-y as you go along. So the first one is maybe we've been calling it CSR, corporate social responsibility, giving back, charity, community activity. These are all things that have been going on for decades in the industry, maybe longer. So the first is just, for an insurance company, you should care about corporate citizenship, be a good steward of the world that you exist in. Your employees look to you for that. So, employees volunteering and wanting to give back, like that's very common. It tends to lead them to feel better about the company. There's no question, generationally, younger generations are more purpose-driven, and they care about the mission and what you're actually doing, the impact you have. So, they're not jaded by, I just have to go in, 9 to 5 and have the job yet. They're genuinely, they care about the impact of where they work and the things that business stands for. So from an employee engagement standpoint, that first one about being a good corporate citizen, that's front and center. And like, it's not insurance specific. We happen to be a very large sector that employs a lot of people. So our chance to have an impact as a good corporate citizen is pretty large. The other reason why it's great is going back to all that ambiguity and difficulty and like nailing down what is ESG and how do we balance all the things. This one is totally in our control. This is the only thing where like we can 100% choose what we do, where we put our donations, what time and activities our employees are doing when they're giving back, what kind of power we use for the buildings that we're in. If we're in buildings, are we traveling? There's some really interesting things that different companies have done around trying to allow corporate travel, but making the decision and the impact of that travel much more apparent. So like Swiss Re actually charges you for the carbon offset that they buy whenever you do a business trip. So the company made a call like, we are going to buy carbon offsets for any business travel, but now they're explicitly charging back the business unit that's putting the travel in. You can do it, but you understand the total cost of what you're doing. So they empower you to make a smarter decision for your business. Those are all within our control. And I love that about it, because so often, we can't control when a hurricane's going to kick up. Flooding, like none of these things can we control. This is one of those rare opportunities for insurers to actually get control of something. So I like this one, and I think we should all pay attention to it. And it's something we've been doing for ages. So, why not be purposeful and thoughtful in what we're doing? But it's the next two that I think start to get it more insurance-y. And the first one is, it's broader than insurance, but it becomes a bigger deal to us, and that's investing in change. Insurance is one of the largest institutional investors of any space in the world, which means we have a lot of money, our surplus, our assets, that we put back into lots of different activities that fuels a lot of growth and creation and economic development throughout the world. That's a huge responsibility. It's not unique to us. The banking sector has it as well. Governments do it too. There's lots of different spaces that have a big institutional investment impact, but we are one of the largest anywhere. And that's where the responsibility starting for insurers is starting to bubble up more. And so, what investment decisions are you making? Are you investing in fossil fuels? Are you investing in renewables? Are you investing in, like some brilliant microfinance institutions that are trying to help populations that have been living in poverty without much means to escape that, find paths to economic self-sustenance? That's what I focused on in my undergrad work. I was an econ major, and there's just some really brilliant stuff going on, but they need capital and they need support. So, there's all these different ways that through the choices we make, we're either fueling more things that are not aligned with ESG and move us as a society further away from trying to make things better, more sustainable, make the planet livable for longer, or we can put literally trillions of dollars that we invest into, making things better. And so that's incredibly important for us to use our investment decisions to spark change. And the cool thing with that is, like, as big and confusing as this is, there are folks who've already started to do this work, and the UN has some guidance on exactly what to do. They call it the PRI, the Principles for Responsible Investing. And insurance companies have been signing on to the PRI, committing their assets, which then has a set of stipulations and guidance for what you do with those assets so that you're investing in alignment with these things. Really good participation from European insurers. So far, as of when I put my report out, there were 2 US insurers. I'm proud to say that my my alma mater, Liberty Mutual, is one of those 2. I would love to see more American insurance companies get on board with that. And we as a country have been slower to get in alignment with this, but that just means there's room for us to do better. It's a nice opportunity. I don't want to just keep rambling as I get into the third, but I didn't know if you had something you wanted to say before.
Well, and I think you're getting into some of the practical areas of movement and activity that can bubble up to supporting these ideas. And so I'd love to hear what that third item is, and then I'll probably have some more questions.
Okay. So the third one is the most super insurance-y of all. And this one, is also the hardest to put into action. But just like we had making different investment decisions with the surplus assets that we have to invest, we need to do the same thing with our underwriting decisions. And if you look at the order of magnitude of the impact, it's also increasing as you move from corporate citizenship and doing the right things with your travel policies and your energy and all that kind of stuff. It's bigger when you look at investing, more dollars on the table, more impact to have. It's massive when you look at what our underwriting decisions do on ESG. The reason is you look at the global economy. I have the number on the top of my head. It's 80 something trillion dollars. Like, it is massive. The vast majority of that is directly enabled by insurance and seizes up without it. Basically, everything that isn't government is directly fueled by insurance and can't go on without it. And much of what the government is spending on also is driven by insurance, because all those public works projects and all of these things have insurance. Those contractors that they're hiring, the defense spend, there's insurance policies making all of those things possible. And governments use a lot of energy, and they have a lot of energy policies, and they have stores of energy. We've got strategic reserves of oil and all that kind of stuff. Insurance keeps all those things moving. So it's almost 100%. I actually struggle to think of areas where insurance has nothing to do with each dollar of the economy, but I don't know everything. I'm sure there's some pockets where it's not 100%, but it is by far a much bigger number. That component of the economy, the global economy, that does not move without insurance, or moves at a much higher cost or much slower pace without insurance. That's where we are really the biggest unlock in ESG out of any industry in any way, shape, or form. And that's why I think this is 100% at our front door, and also means we have tremendous power and responsibility to make an impact through the decisions we make when it comes to wielding that capacity pen. So this is a really big deal for insurance. And that's why for me, it was like, we can talk about how you donate your time and your travel, that's all good and it's important, but really every company should be doing that. That's why insurance. We can talk about the investments because it's a much bigger thing for us than many, bagel shops and gas stations. Like, they're not thinking about their investing of their assets, at the giant, like ExxonMobil is, but not the local gas station. Insurance does do that with every single insurance carrier or reinsurer. But what we insure is game changing. And that includes our broker partners as well. What deals are they willing to broke? Or what agents, what they're willing to place or not place. That's really critical. So all of us in this ecosystem genuinely have a very strong hand in the direction of the global economy, and whether it's moving us forward on ESG issues or not.
So I want to dive into that kind of like market enablement that you talked about, and talk a little bit more about how that gets tricky and where it might get sticky for insurers to kind of make that move. Because like you said, the other two areas of movement and activity are tangible and kind of clear cut. And hopefully, like you said, we're moving in the right direction of making those investments that move the needle. But this one seems, it's still a little ambiguous to me. There we go, making up words there for a second.
No.
So can you dive into that a little bit further?
Yeah. Well, and you're spot on. Like, it is, when you're making an investment decision, you can do due diligence. I'm investing in this or I'm not. It's a lot clearer. When you're doing underwriting, you don't have like 3 months to, if you're doing venture capital, like, that can be a long process, and you get lots of documentation and you dig deep and you'll send experts on it. You generally don't have that kind of access in underwriting. On the really large, big risk engineered stuff, you might send a team of engineers on site and like really dig in, but most risks don't qualify for that. So on the vast majority of risks, you got a how many page app, and we're all striving to get to fewer questions. So like, okay, we're down to, personalized, like 3 questions is the magic number. So how far are you going to get with all the external data you're going to bring in to really dig into the nature of that risk? And the thing is, in investments, it's much clearer what the chain looks like, all the subsidiaries and everything, because that gets exposed. With underwriting, you're insuring entity X. You don't know who they do business with. You don't know who they're customers of. or who their customers are. So something could look like, we're going to invest in this solar, we're going to insure, this solar business. Awesome. That's great, like great for the climate, and look like they've got, military veterans and disabled people. And it's like, they're hitting all these boxes of things that you see, you care about, like fantastic. But, they're also driving these, like they bought a fleet of trucks to do all their installs, and the trucks are like 20 years old and they're polluting like crazy. And, like while they're installing the solar stuff, they're doing all these other things that are not helping on the environmental front. Or, you could say like, well, the materials that go into those solar panels, or it's been a lot of talk lately about EVs and the batteries, like the lithium mining is really destructive to the environment. And there's people who say it's not as bad as you say it is. And it's clearly like digging holes in the earth and using chemicals to extract things is not ideal for the environment. Like whether you're doing it less bad than you used to, or it's not as bad as people say it is, like it's still not as good as not doing it. I would say, like,
There's
if you
for improvement either way.
right, like when people tell me something like that, it's like, oh, well, we had 100 questions in our app last year, we got it down to 80. I'm like, well, that's good, but it's actually not good, because it's still way too many. It's like, I robbed 10 banks last year, I only robbed 5 this year, so I'm good. No, you're still a bank robber. Like, let's just be clear on that. You're just robbing fewer banks. So it is really tricky. And you don't have the time, you don't have the tools, you don't have the insight to really pick those things apart. And frankly, those companies may not know either. And to just say no to a risk. One of the people that I talked to in the research for the paper is a guy named Jonathan Phillips. He works for EXL right now, but he came from the carrier side. And he's like, it's easy to say we will not insure oil and gas or coal, or take your pick of the kind of carbon economy, fossil fuel kind of stuff. And he said, but they're still going to get insurance somewhere. So they might pay a bit more for it. And so, if it reaches a high enough point, maybe that starts to be a board level discussion for that company. But they, at least for right now, they're going to find coverage somewhere. That insurer may not hold them to any standards. So what if you don't want to be facilitating this business? What if you said, yeah, we'll insure you, but we need you to take more, a higher self-insured retention on your transport. So like when you put that oil in the tanker, you're covering the first $100 million of loss. So, you better believe a company who's eating more of that kind of loss is going to pay a lot more attention to the safety of it. Are they going to send that vessel out into rough seas, when it's going to hit their balance sheet? Are they going to inspect the ships more frequently or not when they're more at risk? So like, you start to think about can we tell them we're only going to provide this cover if you're also investing in renewables, or you're doing these things, or, whatever the story is. Can you help change their behaviors through offering them coverage? So there's a quandary here. Is like, are we still in this industry, but trying to make change in it? So make change from the inside, which is really hard to do. Or do we just say, no, we're just going to walk away, and we appreciate someone else is going to pick it up, and that's not great, but eventually no one will. And we're going to take the first stand. And the thing is, there isn't a clear answer. They're both hard to do, because if you walk away from it, now let's look at a carrier who's got 30-40% of their commercial lines is tied up in these kinds of businesses through workers' comp and property and auto and like whatever else they're offering these companies. What happens the day that they flip that switch? Immediately their premium comes down. Their shareholders aren't going to be happy. If they're a mutual, they have a fiduciary responsibility to their mutual, their owners. It raises all of these issues. But it doesn't mean you don't do it. And where this becomes interesting is for people who say like, we can't walk away from that much revenue, or what happens to our employees. I mentioned earlier in the conversation, like, what about all those risk engineers, all the underwriters, all the claims people you have who are specialists in these things? Where are their jobs going? The thing is, if you look around, these industries will not be here at some point in time. And I don't know when some point in time is, but they are under a lot of pressure. Their assets are diminishing. The value of their assets are diminishing. This is not me making this up. Like, this is all very publicly available. S&P has talked about this. I cite a lot of the research in the paper. there will be a point in time where there isn't money in being in those businesses or being connected to those businesses. So what you're really talking about is there's a cliff out there, and at some point you got to stop driving towards it. Now, the earlier you do that, the more opportunity until that point you're giving up on. But at some point, if you've been dependent on this stuff, it's going to fall off a cliff. And then what? With your investments, what happens to those assets when they're devaluing? What happens when 40% of your premium revenue comes from industries that are dying off? You're going to lose that revenue anyway. So, for people who see it as binary, like, why would I just walk away from money? You have to understand the choice is about to be taken out of your hands. I don't know how long about really is, but it is going to happen. And like that first corporate citizenship one, this moment is one of the few moments you get to actually have control over it. So what happens to your employees and how things move? And if you move into some new sectors, maybe that's an opportunity for retraining and redeployment. But if you sit where you are and you wait for it to die off, then you don't have any choice. Your business just goes away. So it may not feel like that, but a lot of people said that about all the digitization, and then the pandemic hit, and then suddenly everyone had to work from home in a matter of like minutes, right? Mm-hmm. This is not the first time that we faced a cliff. And unfortunately, we tend to make the same decision in each of those moments where it's, well, that's, I'll be retired before that happens. Or we have so much surplus. I hear this time and time again, we'll deal with that problem when it hits. That's not the time you deal with it because it's too late. So this is one of those moments, and carriers are waking up to this. This is one of those moments where we start to make conscious decisions. So I talk about some of the choices being made. Again, the UN is, it's much newer than the PRI, but they have the PSI, which is the Principles for Sustainable Insurance. They just put that out, and it's not formalized yet, but you can still, as an insurer, you can join that group, which again has guidance, it has a pledge. It's about reducing fossil fuel, insuring, and a number of other things, but also on the governance side is being transparent about that. So this is this really interesting moment because this is a huge issue. And this is kind of that time where we get to, and the get to is a key, we get to make a choice about how we navigate it versus we arrive at that moment where it's now too late and we have to figure out how do we survive, which is a very different kind of decision than how do I find opportunity. And that's why I just feel like super critical timing and really important for the insurance industry, especially in the US where we haven't been as quick to embrace it. Really important thing for us to start to think about.
Well, and you, at the very, very beginning of the conversation when we were defining ESG, you were kind of like, take whatever noun you want to put at the end of it. And the more that you're talking, again, it's tied to strategies, it's tied to, you talked through how all of those different nouns fit with the acronym to support it, because it is more than just, we're going to have an impact. Well, no, It's more than the impact. It's how do we talk about this strategy? How do we use this strategy to fuel our growth strategy moving forward? Yeah. And to your point, we get to make those decisions as opposed to having something happen to you, which I think is a really critical point to drive home again. Yeah. Before we round out our time together, one, I want to thank you for letting me steal your mic. And
thank you for doing it. You said yes right away, which was awesome. I didn't know how you'd take it.
And number two, tell everybody how they can get a hold of the report.
Yes. So the easiest way to get to the report is future-of-insurance.com/ESG. And you can download it right there. It's totally free. Duck Creek was nice enough to sponsor the work behind this report, so I didn't have to charge anyone for it. So I'm excited to make that available, and it's important.
You do a little under your banner, because other side.
Oh, well, yeah, I'll just block this one. Well, most people listen. Most people don't watch the YouTube, because I always say, watching a show about insurance that isn't Ed Halsey, that's worth watching.
Yeah.
But yeah, I'll put that in the show notes and everything, and I'll link to it in the video as well. I'll have it in the lower third for everybody.
Perfect.
Thanks to Emma for joining me as the guest host for this episode. I thought this was such an important topic to bring to you, and I didn't want to just sit here alone and talk about it. I wanted a great host to join me, and Emma is that. If you don't follow her on LinkedIn, you absolutely should. She puts out awesome content on the regular. talks to great people from across the industry, and also just does a bunch of fun videos on her own. Really good stuff. Thank you all for sticking with this. It is a big topic. It's a deep topic. It can be actually really scary. It can be daunting. And there are ways for us to get through it. We just have to figure out how to think about it. And that's what I was trying to provide with this piece that I put out on ESG. If you want to get it, just go to future-of-insurance.com/ESG and you can download it for free right there. A big thanks again to Emma. A thank you to Duck Creek, who made this whole report possible. And it's the reason why I was able to give it away for free. You can check it out, take in all the insights. Duck Creek was a huge support, not just in helping me make it possible, but in getting some great connections going for more people to involve in the project and get some thoughts from, to bring a lot of different perspectives and experiences to bear. So thank you to the team at Duck Creek. And a thank you to Medallia. This is the last episode in the first season of this show. And Medallia took a flyer on the show before it was even a thing and said, yes, we will stand by it. We want to see this content come out, so we will help support it. And they've been with me through that whole first season. So thank you, a huge thank you to Medallia for making this show possible. If you've been enjoying the content and what it's trying to do for the insurance industry, they have a big hand in making that happen. So huge thanks to Medallia. And thank you to all of you for sticking through with the first season. I hope it's been useful and insightful and thought-provoking. And I've already started work on season 2. So there is great stuff still to come. And of course, lots more in the whole world of the future of insurance. So stay tuned. Just go to future-of-insurance.com. Stay abreast of what's going on. Share things with your friends, with your colleagues, with your community. And all of us together can push this industry forward so it's really stays connected and serving in that core mission of standing by people at the toughest moments they face. So with that, thank you all. And I will see you back for season 2 of the Future of Insurance podcast.